Hello everyone, and welcome to NeoSystems webinar, GovCon Accounting 101, Cash Flow Management for Government Contractors. This is in our series that we've been putting on in conjunction with SCORE. We covered indirect and direct rates. We kind of dived into contract types and pricing, and then we spent some time trying to understand the DCAA. Today we're discussing cash management for government contractors, as I already said, and this will be the final and fourth in the webinar series, which will bring us then to the workshop, which we will have next week. Sean and I have been working on this workshop, and we're going to have a lot of fun with it. In one way, we're covering a lot of this material again, but we're going to be going into depth. It's going to be more interactive. You'll be able to ask questions. So I hope you can join us for this workshop next week at the SCORE offices down in Washington, D.C. Taking a look at our agenda, first we're going to do some brief introductions, and then we'll get right into what is cash flow. Make sure we have a good understanding of the definitions and all the components that go into cash flow. Then we'll try to understand how to build up a cash forecast so you can manage your business effectively. Go into some tips on managing your cash, different things you should do, things you should avoid, and then we'll open it up to your questions. If at any point during the webinar you have a question, please just type your question into the question box. So a little bit about SCORE. SCORE is a wonderful nonprofit organization, and they provide free and confidential business advice for entrepreneurs and small businesses just like you. They have face-to-face mentoring and low-cost workshops like the one I just mentioned. There's the DC chapter, which has over 50 successful executives who have hundreds of years of relevant experience. If you want more information on SCORE, please visit their website at the URL listed on this page. Now a little bit about NeoSystems. At NeoSystems, we focus on the back office services for nonprofits, government contractors, and other high compliance companies. We manage the accounting for companies such as yours. We do the books, we run the accounting systems, take care of all those day-to-day activities, as well as provide you that financial advice and insights. We also manage the IT. This could be everything from running email servers to providing help desk support to helping you to roll out laptops to all your employees. We also manage the human capital for our clients. Recruiting, onboarding, payroll, all the services that one would expect around human resources and human capital. And now this is a pretty busy slide, so I'm just going to touch on a few key points here. We have our main office, our headquarters in Tysons Corner, Virginia. We've opened up a new office in Orlando, Florida. And we have 575 clients, companies who are hosting in our secure private cloud today. And this represents over 45,000 employees, people doing their timesheets, doing their expense reports, everybody operating through our secure private cloud. And one more thing I'm going to highlight is that NeoSystems has been on the Inc. 5000 list for the last 5 years. And more importantly, and one thing that we're most proud of, is that over 30 of our clients are also on the Inc. 5000 list. Well, that's enough about us. Now what I'd like to do is just learn a little bit more about you and why you're joining our webinar today. Get some insight on how comfortable you are with your current cash flow management. Maybe you're in excellent shape, doing some solid forecasting, looking to pick up some tips, making sure you're not missing anything, or you're in good shape, you can create your cash flow projections, but you're not doing it as regularly as you should do. You're just doing it from time to time. Then some of you might be more in fair shape, doing it kind of ad hoc analysis, kind of, as we say, back in the envelope, like, okay, I've got so much money coming in, so much money going out, where am I? And then, maybe you really need help. Give a few more seconds, let you put in your answer poll. Please check whichever one is closest, matches where your skills are today. can still see a lot of people are entering in, so I'm going to let this poll go just a little bit longer. And I promise you, no matter what your answer is, Sean's going to have some excellent tips and tricks and insights to share with you today. I'm going to give you 5 more seconds. 4, 3, 2, 1. Close the poll. Share the results. Excellent, excellent. Quite a variety of experience levels here, but the #1 answer is fair, doing some ad hoc analysis, more back of the envelope. And that, when I remember when I was working at a government contractor, that was a lot of what we were doing. As we matured, we did get to more periodic cash flows. So regardless of where your answer, there's going to be something in this material for you. And so we're excited to move it along and get into our webinar. With me today, I have Chen. Sean is our Vice President of Client Services. He has over 18 years of experience in accounting and financial management roles within government contracting. He's responsible for delivering strategic financial management advice to our clients, as well as overseeing the day-to-day accounting operations for them. With that, let me turn it over to Sean.
Thank you, Brian, for the introduction, and thank you all for joining us today. Hopefully we see some, if not all of you all, at the upcoming workshop and the SCORE offices. So we'll go right into what is cash flow. So on this example here, the green side or the left side represents all the incoming cash, and then the right side or the red letters represent all that cash that's going out of the company. So your inflow, obviously, are all the invoices that you send out to your clients or government agency. If some of you all use credit card machines, all the credit card sales are considered inflow. Your interest income, tax refunds, rebates, your line of credit, if you all have a line of credit with the bank, is considered your cash inflow, and other financing. So, and then on the other side, your outflow is obviously your payroll, employee benefits. If you use consultants or subcontractors, those costs are considered outflow. Your office rent, office utilities, expenses, asset purchases, and then finally debt payments, including interest. So a common question that we come across a lot with our clients, especially ones that are just starting off in government contracting, is that they'll take a look at their income statement, and their income statement might show, 15% net income based on their revenue, but their cash balance might say negative $20,000, and they're not understanding that. One is depending on how you recognize income and how you is whether if you're in accrual-based accounting or if you're cash-based accounting. So if you're in accrual-based accounting, when you're taking a look at your income statement, it won't necessarily match your cash balance. But also keep in mind that your cash balance on your GL account, anytime you cut checks, even though they haven't been cashed yet, are considered outflow within the GL system. So some of the cash flow forecast in developing a cash flow, some of the benefits and best practices are benefits. Obviously, it gives you short and long-term visibility to your cash outflow and your inflow. If you're able to develop short-term, meaning within a week to, let's say, a month, you would have visibility into when expected payroll hits, when you're supposed to pay the rent, and how often you're invoicing, and the amounts of invoices that you're able to generate within that particular month. Forecasts also alert you when you will have potentially a cash shortfall. So if you have a long-term forecast out, let's say a 6-month to a year cash forecast, you'll be able to see when you'll need to either cut back on expenses, hold back on a vendor payment, or increase timeliness of your invoicing. That's really the benefit of having a cash forecast, And then ultimately, when you have a cash flow forecast developed, it gives you the ability to manage your business more effectively because you're able to make sound decisions when it comes to investing, spending, or putting away your cash. So best practices, keep a living document, maintain that particular document, whether it's through a spreadsheet or application that you have, maintain and update regularly based on what type of forecast that you have, whether it's short-term or long-term forecast. Try to keep a weekly, semi-monthly, monthly, and in either a semi-annual or annual type forecast. Obviously, annual it's pretty long-term. A lot of things can change, but that's why you have other types of forecasts to complement your annual forecast. What the annual forecast is really good for is determining how much money you want to spend towards the end of the year, whether you want to spend that money to reinvest back into the company, new servers, new laptops, giving out bonuses to your employees. That's really the advantage of having an annual cash flow forecast. And daily monitoring. Compare your cash flow forecast to your bank balance on a daily basis. That helps out a lot in maintaining and managing your cash. So some of the other cash flow in developing a cash flow forecast is projecting your revenue and expenses. You know, a good way to look at that data is to print out previous income statements, your balance sheet, and then use those historical trends. Take a conservative approach when projecting cash inflow. So if you're just solely based on invoicing or AR, you know, determine how often your receivables are paid. Keep track of that because not every company gets paid within 30 days. So after each month that you invoice, keep track of how many of those clients or those invoices get paid within 30 days. So typically you're around 50 to 60% of those invoices getting paid 30 days, 30% paid within 60 days, 5% paid on 75 plus days. So that's a good way to gauge conservatively how much cash will be incoming on a monthly basis. And when you're projecting your cash outflow, take an aggressive approach. So put in a little bit more than you're expecting. You know, obviously payroll and your payroll taxes are usually fixed costs unless you have new employees or you have employee terminate. But your vendor payments, your rent payments, your utilities, office expenses, your consultant costs, you know, take an aggressive approach so that it leaves you a balance that you're comfortable with. And if you spend less during that month, then carry that remaining cash over into the next forecast. And having that type of approach, especially with an aggressive approach on your outflow, you'll be able to better manage your cash within the company. Take in consideration your line of credit repayment also, including your interest payments when you're developing your cash forecast, especially on the outflow. So I know this is a bit of an eye test for you all, but here's an example of a 30-day cash flow forecast, which would just be for one particular month. And you know, if you can develop something like this, and this is something that you know, we can help you with also, but on the 30-day cash flow forecast, you basically have by week all the incoming cash receipts, potential cash disbursements, and then on the left-hand side it gives you what the ending balance of your cash balance would be excuse me, at the end of the month. And one that I really actually like using is a monthly cash flow forecast as an example here, where if you have contracts or you have credit card sales or any type of other revenue or cash, you put that in at the top, And as you can see in this example, it shows you by contract. So if you work on based on contracts, then you would just put in how much you're expecting to invoice for that particular month. So then you have your payments where you put in salaries and wages, your tax payments, other indirect costs, professional fees, and that sort of thing. And then it gives you a cash surplus or a deficit.
Okay, so we're going to have a little fun breaking up the little monotony of the PowerPoints before we get into some more of the, Sean just kind of took you through some exercises there with the spreadsheets and stuff, but now he's going to get into managing cash and all that in just a moment. But we're going to have a little trivia question, and I want you to enter your answer into the question box. The first correct answer wins a free registration to the workshop. So here's your question. When is the NeoSystems SCORE workshop? What's the date? How many of you are paying attention at the beginning of this webinar where I announced the date of the upcoming workshop? Letting a few answers come in. Okay. Well, we have a winner, and it's Jeannie Z, and she correctly guessed very quickly, April 22nd. So thank you, Jeannie. We'll be registering that for you, and we'll probably reach out and make sure, we'll let you know that you're registered, and we'll get that registration information to you. But if any of you else are interested, there's the registration. There's the day of the workshop, April 22nd. Again, congratulations, Jeannie. And thank you for that little interruption. Let's get back to how you can manage your cash.
So managing your cash, know your key metrics data. We'll get into the key metrics a little bit later in the slide presentation. Be proactive in your collection process. Don't wait until day 31. Once you invoice out, maybe contact them after a week to the accounts payable department to see if there's any problem with the invoice and that sort of thing. Control your spending, obviously. On the accounts payable terms, when you get a accounts payable invoice from a vendor, you don't have to pay it right away. Look at the terms. Most of them are net 30. So you basically have 30 days, and you can plan for those vendor payments when you get those statements. Utilize your banking relationship. So what I mean by that is that if you have a line of credit already and you have a potential to win a significantly large contract, one that adds in 10 FTEs or 30 FTEs, let your bank know that ahead of time. Let them know that, hey, I could have a potential 30 more FTEs. I'll probably need X amount more dollars on the line of credit. What can you do for me? Are there any documents I need to fill out, or are there any covenants or borrowing base type requirements that would be required for that type of increase? So utilize your banking relationship there. Know your tax payment deadlines. This is very important because obviously if you don't pay your taxes on time, you incur pretty heavy penalties and fines, which is the last bullet there. Avoid penalties and fines. They'll do nothing but drain your cash quick. So some of the business metrics that we use to gauge not only just revenue but cash is one is your labor utilization. So obviously the higher your labor utilization would equal higher receivables in most cases. So you're able to kind of determine what your invoicing amount would be when you post your labor or when you finalize your monthly labor, because labor has to get posted or finalized obviously first before you develop invoicing. And so with a metric like this, you're able to kind of determine, oh, okay, well, since my labor is higher this month, my receivables should be higher this month if you have other than fixed price type invoicing contracts. Another good metric to gauge cash flow is your monthly DSO, which is day sales outstanding. So what this does is that it gives you a picture of how many days it takes the company to collect on receivables on average. So this gives you insight in the timing of your cash collection. And revenue trends are valuable, and in this chart it's a revenue trend by month. They're valuable because obviously revenue leads to receivables, and revenue doesn't really equate to cash, but it leads to receivables. So when you look at a labor utilization chart, your revenue should really follow your labor utilization. Another good metrics to use are your indirect costs or your indirect spending. So they would include all of your health benefits, all of your office expenses, your legal expenses, rent expenses, and that sort of thing. So if you have a specific target, and for those that have been with us through the GovCon series, we've gone into indirect rates and what they mean, what builds up a fringe rate, what builds up an overhead and a G&A rate. So with all that information that you have, now you're able to kind of monitor what you think your fringe, your overhead, and your G&A should be. So once you have that ability and you have the ability to actually track your indirect rates, now you can track that particular spending using these metrics. So obviously the higher above your target rate means you're spending more from an operating perspective. So some of the cash flow tips. On your AR, invoicing should be top priority. If you have fixed price invoices that are pretty standard amount for each month, fire those off at the beginning of the month, or get them ready on the last day of the month so that you can send them out to your client at the beginning of the month. There's no reason why, if you have a fixed price invoice, that you can't invoice for the very first day of the month. If for those that have T&M or cost plus or just a service-based type contract or client, invoice as quickly as you can once those timesheets are basically approved and or posted or finalized. So what I like to do for my clients is to have the invoicing out within a 10-day period. So I'd like to have all timesheets signed, all expenses in as far as ODCs like direct travel, subcontractor costs, in before the 10th day of the month, so I can get all my invoices out the door by the 10th day. So then monitor your AR. Again, understand which companies, clients, or agencies pay within 30 days, because that's going to be basically your cash cow clients or agencies, the ones that pay very, very quickly. So, and you'll start to see a trend once you start to monitor these. Excuse me. You'll see which clients or agencies pay later than 30 days, which ones are habitually late, past 70 days. Once you have that trend data, then you're able to be proactive. You're able to call that particular client that always pays 70-plus days and say, hey, is there anything wrong with this invoice that I sent out? When can I expect my payment? And then just keep staying on top of them so that they can move from a 70 to a 30-day status, right? So once you have that trend data, it becomes actually very valuable information. And most importantly, review your receivables or your invoices before they go out. Make sure that it has all the correct information. If you have to send it to the government, make sure that it has the right acronyms, the right codes on it, and you're billing on the right CLIN, for instance. So your accounts payable. Use your vendor discounts to your advantage. If a vendor says, hey, if you pay with me within 15 days, I'll give you an extra 3 or 5% off on the invoice, use that as your advantage. Develop purchasing policies within the company. Why this is so important is because as you begin to grow, you're going to have other employees take on responsibilities that you as a CEO may have already been used to. So, that individual might make purchases for the company, but it's not really monitored in any type of way. So if you have a purchasing policy within the company, then whatever purchases are made within the company, it's following a process. It's following a policy. So that way there's no excess spending. Utilize company credit cards when practical. Especially, I really believe in this. Having company credit cards is great, but having the employee be responsible for the company credit card is even better because that really doesn't leave you as a company liable for non-payment and abuse and that sort of thing. And again, for those that aren't able to get a line of credit or have a line of credit, avoid factoring at all costs. For those that don't understand factoring, factoring is basically you're providing an invoice to a quasi-bank. The bank says, okay, I can pay you for this invoice. I just have to verify it, and they'll give you 80% of the invoice value as cash. So you'll get that cash rather quickly. But then they'll keep a certain portion of that particular invoice when you get paid, and on top of that, they charge you for interest. So if you're already kind of spiraling down out of control within your cash, and you say, well, man, I need cash quickly, first thing that pops into executives' heads are really, hey, let's go with a factoring company. So if you're already having cash flow issues, you're going to have bigger cash flow issues when you go into factoring. So cash is king. That still applies to this day and age. Have a trusted financial advisor, whether it's a CFO, a business partner, an outsourcing company. Find a trusted financial advisor that can provide insight to you as a business owner, that can come up with creative financing options. So again, if you feel that your only avenue is to factor, having a good CFO or a good financial advisor, you were able to develop other options for you. And they're able to minimize financial obstacles, roadblocks, and once you have a trusted financial advisor, it gives you a solid foundation to make good financial decisions. And really, the last thing to kind of say on the cash is king part is the solid business systems and internal controls within the company, as far as policies and procedures, provide a great basis for cash management. So managing cash flow successfully, with your business growth, for instance, as you begin to grow in business, you're going to find yourself spending a lot more money because your business is in growth mode. So investment in your resources is vital for the growth. Spending good money on employees, benefits, your infrastructure, technology, new servers, new laptops, that sort of thing, and invest in new markets when you have a good cash flow management. If you want to go into new verticals and you have that excess cash and you have the ability to hire an employee to help you make that transition to a new vertical, that's business growth, and that's just business overall. Managing your cash flow successfully will improve employee morale, obviously. Even though your employees might not be privy to that particular information, believe me, employees know when the company is struggling from a financial or cash perspective. Managing cash flow also gives you stronger vendor relationships, so that if you were to run into trouble with any type of vendor payment, if you have a strong relationship with that particular vendor, they might be willing to work with you on payment terms and that sort of thing. And obviously less financial stress for the executives or the owner of the company.
Thank you, Sean. Yeah, so true on a lot of those benefits there. With the, it all just makes sense whether on a personal level or on a business level. When you can see that visibility, have that visibility into your future, you can take an investment. Another poll question for you: what cash flow management challenges are you experiencing? Select one. Are you having challenges with high DSO, day sales outstanding, employee utilization? Are you reaching the upper limit on your line of credit? Perhaps submitting those contract compliant invoices in a timely manner is your biggest challenge. We've all seen where that can delay getting paid, and delayed getting paid is definitely going to impact your cash flow. Or maybe something else is really providing a challenge for you. If you do select other, we'd really appreciate it if you just write in the question box what your other challenge is, because we always use this to learn. So as we learn from listening to you, just like you learn from listening to us. So please tell us if you checked other, please tell us what your other challenge is. How are we doing? Looks like people are still filling in our poll. So again, please select one. What cash flow management challenges are you experiencing? The high DSO, day sales outstanding. Employee utilization, that can be a tough problem for people. Maybe you're reaching the upper limit on your line of credit. And submitting contract compliant invoices. All right? Well, now people are still filing in. Every time I think we're full, like I see one more person answering. So I'm going to give you 5 more seconds. If you haven't filled in the poll, this is your last chance. 5, 4, 3, 2, 1. Close the poll. Share the results. Other is our #1 answer. It shows you what I know when I put these polls together. So if you did select other, please put in your other reason into the question box. And certainly submitting those contract compliant invoices in a timely manner. That must be extremely frustrating. You did the work, you delivered, and now the only thing holding you back from getting paid is that they don't like the invoice. So we share your frustration here, and I know Sean and his team of people, they work very diligently to get those compliant invoices so that our clients get paid in a timely fashion. All right, I'm going to move along here and want to share some other resources that are available to you. Got to mention the Greater Washington, D.C. chapter of SCORE, a great resource. I know many of you are familiar with them and what a great resource they are. Neo training from NeoSystems. We have these webinars like you've experienced today. Please feel free to check out our website. We also have courses that are online or in person. Our blog, we blog about stuff, different issues with DCAA, their new requirements for business systems that are coming out. We blog on these topics. Please feel free to check that out. We have our news and notes, so if you want to subscribe to our newsletter, always some interesting stories in there. We do put on some industry events, and one industry event we've got coming up is next Friday. We're going to be putting on a breakfast it is geared towards nonprofits, but we're going to be looking at a lot of these HR issues and how to go about making sure that your people, their mission is aligned with your mission, and other areas about how about going sure and retaining people, how to sometimes the incentive for people to come join your company isn't just dollars, there's other reasons. So these are things we're going to be talking about. It is geared towards nonprofits, but if it does apply to GovCon as well. Please come to our website, check it out. It is completely complimentary. There's no charge for that. So, it's not like I'm doing a sales pitch here. Just want to be clear about that. And next thing I want to mention is, again, the workshop that is going to be next week. If you haven't signed up, when we send out the thank you for attending email, we'll make sure that there's a link in there that you can just click on and register now for that workshop at the SCORE offices down in Washington, D.C. So we're getting ready to open up to your questions. So if you have questions, please type them into the question box. And one question we always get: will the slides be available? Yes, we'll be sending out the slides as part of our follow-up email, and hopefully we'll be able to put out a link as well for a recording for those people who missed it or just really want to hear it again. Sean, any of those questions look like something we can handle on the air?
Well, I think it's not really a question, but I'm going to put it into a question. So how can I get my employees to correctly fill out their timesheets and complete it in a timely manner so that invoices can be sent out? That's a very common problem or a common issue for all sizes of government contractors. One of the ways that I kind of suggest to some clients are that if you have a bonus program, for instance, and and bonuses are tied to performance, if you put in writing that says, hey, if you fail your timesheet more than 5 times or 10 times per year, anything above and beyond, let's just say the 10 time is the limit, it eats into your bonus by a percentage, and it affects the performance. That's one way to kind of incentivize employees to fill out their timesheets correctly or in a timely manner. There's other things that you can do is from a disciplinary perspective, but obviously you can't just not pay the employee if they're not filling out their timesheet. So
that's a shame, isn't it?
Yeah.
that would be the big counter.
Yeah, so it's a really common problem, and that's one way to kind of counter that.
Yeah, if I may, Sean, I can share a couple of stories from back when I was a government contractor. I mean, our program manager would sit us down. You're supposed to be doing your timesheet every day, but he explained to us, because we had to turn ours in weekly. I'm going to date myself. This goes back like 20-plus years. And he just said, it's Friday morning. It's the most important thing you're doing today is your timesheet. If it's not on my desk by 10 o'clock, you better have an explanation as to why. Mm-hmm. Another government contractor, I just heard this out when I was at the, it's actually one of the sessions at Deltec Insight when I was there last fall. How they ran it was, if you're 3 times late, you're having a discussion with your program manager. 5 times late, it was you're having a discussion with the CFO. I forget what the next number was, but it was the next one was you're having a discussion with the CFO who's having HR who's terminating you. They took a very extreme approach. They're like, we've explained this to you. And I mean, what are the ramifications for not getting those timesheets in? I mean, aren't there, if you get DCA audits and it can be significant in the government contracting world.
Yeah, I mean, if you're subject to DCA, yes, you can get audited for, timesheets and completing timesheets and, making corrections and that sort of thing. But obviously the biggest impact for not getting timesheets completed is invoicing. It delays cash. Delaying cash that's coming in the door puts a strain on cash going out the door, and so those are things that you have to really get under control right away, even if it's strict disciplinary actions like Brian was saying. Make sure that those are priorities. Right, and make sure that enforcement process and policy is in your employee handbook that the employees sign during orientation or an update to those particular policies. Thank you for that comment. So it looks like that's all the questions. Again, thank you all very much for joining us today, and we look forward to seeing you all on the workshop on the 22nd.
Thanks, everyone.